Hey guys, this is Elliot Wave Sage. Want to go ahead and just get this market update out there as soon as possible for you guys. And like always, none of this is financial advice. Always do what's best for you. Just use this for your education and entertainment purposes only. So know what the big picture, right? We've been saying this on my channel for since its existence that we will see a massive indice crash at some point in the future. But we just don't, none of us are, could really tell the future to know exactly when. So we try to use Elliott waves to guide us and help us like pinpoint where that will occur. As you can see here, we have a 1-2, but we really don't have an equivalent wave 4 yet. This wave 4, I mean, you really can't, get that. So we could, so we know we should have some type of warning sign, that will give us some early indication here. Now, if we also have this first wave here, we don't really have a weekly cycle correction yet. We don't see a 4 here either. And here's the downtrend line right there. It's still intact, right? So bigger picture, it's not too much to worry about yet. And then, of course, we have this pullback on the daily cycle, wave 4, right here, which is in a buy area. Now, where do we go from here? Well, we would expect a 5. Then we would expect a weekly cycle correction 4 that matches this. We would expect another 5. It probably hit close to the final targets, and then we would have a massive drop similar to this, and then another high, and then a crash. That would be a classic Elliott wave like look at this situation. But the market's going to do what it's going to do. Like I can force labels. So I could put this as a 1, 2, 3, 4, 5. And I could put this 3 here, a 4 here. I could put a 5, a 3. I can fit the label to make this all work out, but of course it would not be it would not have the right shape. But there's no specific rule on shape, but it's just typically how these waves work out. So is it like time to go, oh my God, it's going to crash, get out, get out, get out? No, it's just time to know that this could be the first tremor, or maybe we're off by a swing. Maybe we're actually in this type of correction now, a little bit deeper. But what we know is probably a lot of this nice easy money's over, and in fact, it's going to be more of a trader's environment coming up as the market tops in a lot of violent price action, kind of like we're starting to see. But we have to take it one step at a time. So what will happen in the SPY if we break trend, we break 545, or more importantly 542? Well, then I think you have to you're in a much higher degree correction. We'll relabel it, and then of course we will swing, bounce, and fail, and it's going to take a little bit of time. And we could see prices as low as 520 down in this area. And then of course it could just keep going. So then we have to shift our thinking. So that's very important situation for the indices. But you have to kind of think about what you want to do based on your situation. But I mean, I'm just showing you like my case. But I never had ever called for the Moon Boy scenario. I've always thrown it out there that there is a possibility that this is not a wave 5 of the grand super cycle here, that in fact this was another one too, right? But I never believed in that, but some people still do. So then again, and if we do decide to just violently come and break down, then there's a good chance that that's it. It's 5. So just keep that in the back of your mind. But we're not near there yet. We're nowhere near there. And then of course one thing you want to keep an eye on is these cycles. So the weekly cycle we haven't broke. Now if we break the weekly cycle, then we're actually in this degree 4, not the we have a different degree. And then of course you even have the monthly cycle, which I think represents more or less the grand super cycle, and it's got a long way to go still, okay, before we get any kind of confirmation. Okay, so for right now, it could have been a good opportunity to buy today. That's the SPY index for another high up to 574 before you get a really violent correction, a very ugly, probably into the election. And and you get this bounce. Now again, if we just keep breaking down, then more than likely this 3 is in, and we'll go lower, we'll bounce, and then we'll fail again, and we'll be in kind of a little bear market most of all the summer into the fall. Just think about that. Now the triple Qs is different. Just again, big picture on the triple Qs, guys. Again, we have this in this 5th wave. A 3, 4, 5, 1, 2. Now I've labeled this as a 1, 2, 3, 4. One more high at 5. Now you can easily say that's a 1, 2, 3, 4, 5, right? I can easily do that. I don't like that because the divergence being erased. But by Elliott wave theory, that is still sound. So what if tech is popped and we're about to see technology indices have an epic meltdown and a crash, taking us all the way back down to QQQ 240. Well, we don't know that yet. We'll have a lot of things still need to happen. We have this trend line, so we need to probably break that first. But we also have the monthly stochastic that I think is key for that situation, and we're kind of hugging it, as you can see here. You see, kind of hugging that line, so it's close. It's close. If this monthly cycle breaks down, then it could start. It will correct this whole leg, and there's a couple possibilities. Of course, wave 5 could extend, right? We could get a 1, 2, 3, 4, 5, or it could be it, and it could just crash. So just I want to make sure people are aware of the big picture. We did get stopped out here, right? So today was a good reason. This is why you got to use stop loss, right? We have to use a stop loss, technology did not bounce where it would have typically you would have expected it. So now it sidelines for trading this for me. That's just the way it goes. Now, it could still just bounce, and that's the way it happens. But I do think this is on borrowed time, even if we can get one more high. The IWM, as you could see, it was in a buy area, kind of hanging out here. It's at a very critical point because for this wave down, we have corrected in this little flag here. We really need to see follow through. If we don't and get a breakdown, we could have a 1, 2, 3, 4, 5 or a 1, 2, 1, 2. And that's very bearish because there is an alternate count here that I can show you. So right now I have, all we needed from the, again, guys, by the way, I'm predicting this crash, right? So it's always been here. And look, we're only about, 241. We got to 227. So we were getting, to my sell area. So that's something to think about too in IWM. Again, if I have it as an ABC, we need more upside to finish the swings. But there is a count if it's a 3-wave count where it's a WXY and this isn't labeled subdivided the way I have it. You have 3, a connector, and then 3, and you're done here. And that means X is in right now. So how do we know? Okay, so we're going to have to look at our trend lines again. Now look, see how that divergence was erased? That's a classic way these X waves do peak. What that also means is when we do come up here, it's going to actually have to take that peak out, which is going to be pretty tough to do given how far we've already pulled back. So that's got me thinking, has the Russell put X in? Has the Russell, but again, we don't have that confirmation yet. The daily cycle obviously hasn't given you any confirmation of that. The weekly cycle as well. We still do not have any confirmation yet the top is in the Russell. And in fact, the weekly would be better to come up higher to take this peak out. And the monthly, the same thing. So the Russell is very likely that it still needs more upside, just like I have it here. But in the back of my mind, I'm thinking to myself, okay, don't fall in love too much, because like a ticking time bomb, this is going to go off. Boom, boom, at some point, and it's game over. Okay, that's what I think, and this has always been here. The Dow Jones is really interesting. So we had a breakout, and we have this 1 2 1 2 1 2. This was my original label. But now I'm worried that it's not, this isn't the right way to label it because of what's happening right now, but I can't rule it out. So the Dow Jones did break the 4-hour cycle from here. So this is just a 3-wave move. So I talked about this being a trap and a flat correction. Okay, if it is, this could easily do something like this and come back down to 37,000. I think the market did not decide that today, but it's on the trend. It's like a stalemate. Will we bounce and negate the flat, or are we going to open up Monday below and just puke down and then finish this flat? I mentioned that. Now, if we get this flat correction, a couple things. Given the rest of the count, more than likely that's a 3, then that's a 4, and then we get one more high, and guess what? This impulse is finished. Okay, this impulse is finished, and then we'll pull back. And we could pull back pretty deep. Okay, you pull back pretty deep. Now, another thing I look at is, can I get something more bearish, like we've peaked in the grand super cycle in the Dow Jones? Okay. Well, I look here, we have a 1 2, okay, you know, a 1 2 and a 3 4 5. Now, if I force this as a 5 and it only has 3 swings, then I have to say, well, then it's got to be an ended diagonal of some kind with 3 swings in each wave. But this doesn't have a look of it. I mean, maybe I could kind of force that, but look, so you have 1 2 3, so maybe you could put 1 there and 2, and what, maybe 1 2 3. So I don't like this being a full impulse, but even if I do that, that's only 1 2, and this is not even a wave 3, it's a wave 5. So the Dow Jones is also telling me the indices don't line up for a crash based on the way the Dow Jones looks by making this high like we did here. So, but can it correct and be really scary? Yes. Can it be a flat from here? No, not with 5 up here. You can't. So I think with the Dow Jones, it's a tricky account to label right now. But what I would recommend is, given where the market is, we'll be conservative. We'll put a 4 there. We'll say the flat right now is 50-50, and then we get a 5, and then we get a pretty nasty pullback down, somewhere down here. Okay, and that's how I look at the Dow Jones. That's how I look at it. You know. And again, if I look at the grand super cycle, 1 2 3, 4, and then this is 5. Now, there's really no, like, can I force this to be the 5, then this is the 4, right? Well, that's where you get into, well, is this really 1, 2 here or not? So I think when I look at this chart, I'm looking at it as a 1, 2, 3, 4, 5 here. Okay? So it just looks like to me the Dow Jones needs more upside. And even if this is 3 here, it still would need more upside, right? So I just don't like the fact that the market's going to crash with the Dow Jones the way it looks right now. I just don't like it. I just don't like forcing that label. But you have to do what's best for you. So good luck on it. I do think that for the most part, and then the grand super cycle ends. Okay, that's what I'm thinking. And that actually lines up again with where the SPY is, right? But tech is a little different. So maybe tech, is a little out of sync based on what I'm seeing. So, like I said, I can't, I just don't see, I cannot talk myself into this being some massive grand super cycle peak, but I can't easily see it being a flat. It really being a scary correction, like woo, all the way back down. So and again, in 3, 3, 5. I just mention it. I just mention it. And again, there's a lot of ways to label the Dow. So that's how I see the indices now, guys. So I think tech, you got to be super cautious. I think the SPY and Dow Jones seem like it seems pretty premature to have it fall apart here. The IWM, I would be a little bit cautious, but again, it should make a little bit more upside. So that's where we are with the market. But remember, it's like you got to be careful you're not, picking up these pennies in front of a steamroller, because the steamroller is coming, right? At some point, all hell's going to break loose in this market. I do watch the VIX, and the VIX was really strange day, but we tagged the wedge and we got rejected. We have to keep an eye on it, because if we break out of this pattern, the market could easily go down 4 or 5% in one day. Okay, I'm just mentioning that, and then more than likely we're in this wave 4. Okay, I'm just pointing out the obvious, so keep that in mind. And maybe and for all I know, maybe we're in this wave 4. Like, the swings can be off, right? But it doesn't seem likely. But you need to understand, like, the big picture, like where we are. Like, if you're like just starting to buy positions, you have to understand there's people in the market that bought down here, and they're going to want to take profit, and they're already, so you got to understand, like, people been in the market for a while, and they want to take profit. And then you have the big cap tech stocks that have come way off these lows, right? Let's do a go like Amazon, way off these lows, and there's plenty of room to correct. That will take the market down. So just keep it in mind. Keep that in mind. And I'll go through big cap tech in a minute. So that's where I see the market right now. So I think caution is warranted. Know where you are in the bigger cycles within the grand super cycle degree, where the big picture, where things really stand with the market. You have to know that as you're putting money to work. as you're deciding what to do. Um, but you're gonna have to make some pretty good decisions. But if we get this volatility here, I got shown, there'll be a lot of good trade opportunities and trade setups here and here. Just know that this is our future more than likely. Okay. Then let's go to Bitcoin. So Bitcoin was pumping. We have a wave 5 with bearish divergence. I said watch out for the rug pull, and this could be pretty sharp. Now, what happens if we break this low? Well, you know, there's a lot of things that could happen. This would be a connector wave right here of some kind for this leg down. So we would take a whole nother swing lower. And again, we're targeting 42,000. Okay, so that is possible. But we'll need, we have to let it develop. We'll have to, give it a chance to develop. But we'll see where crypto ends up. Now it could keep going higher, erase the divergence, and then it's off to the races. So we just don't know, but the market seems like it's under pressure, so it seems like it's going to do something like that. Oil had a big breakdown today. So this is also the bear case in the back of your mind. We've seen in the past when oil makes its final leg lower and crashes, typically when it comes out of the pattern after 72, usually the market actually crashes with it. Not always, but usually. So be careful there. So that's a warning sign if you're trading in the back of your mind. And then silver was really weak, but again, above 28.5. This is still the count, but it's looking more likely we're going to double correct down. This was some kind of connector, and we're down into 27 in a bigger, higher degree wave 4. And I mentioned that. So again, you have to know how long you want to hold it. And gold totally burned through an area, a support, which is pretty bearish because this is 3 waves. So this could actually still be in a higher degree wave 4 as a flat correction, and we drop all the way back down to 22.5. So this is possible too. And so you have to keep an open mind about where things are going, So just keep an open mind. And of course the VIX. Keep an eye on the VIX. If we could get rejection here and come back down, this should support the market just like it did in April. And then we went to sideways action and finally came out. Now, like I said, if the bears or bulls in the VIX can push out of this, I mean, we have seen this time and time again. When these wedges break, I mean, they break. Boom, boom. Here, up, up. And this wedge is huge. It's almost, this wedge is huge. You break this wedge, it could easily come back up to VIX of 40, 50. Mass panic. Like waterfall, selling, people screaming on TV, selling, mass chaos. But the market may need something like this to happen. We may need this kind of healthy like reaction to get the weak hands out. But again, if I look at the wedge, we always seem to come to the very end of these wedges. This is early, right? It looks pretty early still, so it still looks like not yet. It's not quite yet. Now, let's take a look at the weekly trend line. So it's still not broken out on the weekly. And the monthly, I was looking at the monthly. The monthly is concerning. There you got to break. You got to break there. So the monthly does show a breakout potential. So that's something that should concern you. Now the daily is way overbought. So perhaps you can get this pullback on the daily. and then the market will decide if it wants to have this massive spike, or do we get like a Monday, Black Monday situation in the market where we just open up here and it's a mass wipeout as people go home over the weekend and sleep on what just happened this week. And they're like, yeah, let's get out. So that's over it. So again, and I showed a lot of stocks that people love and trade are showing 5 waves up. Nvidia, of course, the most obvious one. We were not FOMO in Nvidia, and we actually have not hit the area of support. This could be why the market's still under pressure. Now we have completed. I'll just show you. This whole wave is done. Okay, this whole wave is done. This wave 4, look at this wave 2. So I'm naive to think it's just going to bounce and go up. Maybe it's going to take a long time. Maybe it's going to go even deeper. So like that's got to have to put pressure on the market. But this shows that this is over, right? We called that already. And then we also had 5 up on Eli Lilly, which is a major stock of the indices, something to watch out for. We did warn that Amazon here, I had it in like a 1-2, 1-2, but I think it's 5 up with a flat correction that takes us back down to a deeper correction down to 157 to retest this trend line. And it's correcting the whole thing. I just think that's where it is. And Facebook, I mentioned too, we're in this 5th wave, but I think it's probably more, it's better to be more cautious and then just say we have completed 5 waves and we're due a 3-wave pullback and we'll come back down to these areas here. So, but again, is it due a bounce? It should bounce soon, but I would be careful because this is a connector wave for this move down. So this could be the first leg down. So if it does break 459, it could have a lot of panic selling as people are trapped. So as you could see how the market kind of changes, but we knew we're getting close to these peaks, right? We also, I think we had Microsoft in wave 5 as well, or close to it here, this 5th wave. Again, I was looking for one more high, but what if we don't get that? What if it's not that? What if it's another flat like Amazon, A, B, and we get C? So I think you got to know where you are. Look at all this room it has to correct. So just know where you are in the big picture. That's why it's like you can't be sad it's not going up higher because you didn't get in down here, right? Because the people that got in down here, they may be taking profit now. They don't care that you just got in down at 402. They don't care about that. They just care that they made their money and now they're going to get out and they'll wait for a better opportunity maybe when the weekly cycle resets. Just think about that. But on your stocks, check those weekly cycles. As you see them breaking down, then you're probably in a larger degree correction. As you could see, Microsoft here and right here holding it. So it's very you got to be very careful in some of these big cap tech, which is really the indices. And of course, AMD absolutely weak. Now, I told you guys we'll have 3 waves. I want it more upside. This seemed too shallow because what it implied was it would go very deep. And the sad thing is that may happen because we have 5 down here. So we know like more than likely this was going to fail. I thought we would go higher. We didn't. Now you have to start to think the unthinkable that this will break and then this will go all the way down here again. So just think about that. Again, it doesn't have to be the case, but you'll have to manage your risk and think those things. Okay. Amcor broke the stop, and now it's correcting a bigger cycle, so it could drop. So everything's correcting these larger cycles, and a lot of stop losses are firing across the market in the last couple of days. But not everything. Again, not everything was red. There was some green. CrowdStrike was interesting. Again, it had a real deep wave 2. I think our last update is we had a potential 1-2 here, but it broke through that, so it's more like a 1, 2, 3, 4, 5. Again, as long as we're above 281. Now, if we're not, then we have to go back to the drawing board and look at this as three swings. And if it's three swings, this could be a huge flat and CrowdStrike collapse, and that's almost unthinkable. But after what happened today with CrowdStrike, maybe it's not unthinkable anymore. So just these are, so you always, I think the learning is you always have to know the bull case and the bear case, and then you have to make a decision based on what you think the market's going to do. But there's no guarantee that any what you think will happen will happen. It's all about probability and odds, and managing your risk. So anyway, Apple, we had the flat correction. I do think though we're correcting this impulse here, this full wave. So that could actually drop us deeper down to 206. So I think Apple's in a bigger correction, a higher degree correction like the rest of the market. So it should go, it should again, now it will bounce, but it's probably going to fail. That will be a better setup to go long. I don't want to go long here because again, look at the 4-hour reset, and I believe the daily reset, and we even have a weekly. Now, this is also something to keep in mind. The big bear case, you only have 1, 2, 3 up, right? What if this is still wave 2 and it's an A, B, C flat, and we drop Apple all the way back down to 124 even? I'm showing you different ideas. Like, I can't predict the future. I just trade as the market presents, each situation accordingly. But that's why I was trying to be more cautious, because the bear case was starting to develop a little bit today, but not to the point where it's like, holy shit, sell everything you have and go max short. But it's definitely you can see there was tremors in the market. There's an earthquake coming, and you see in the tremors, and you got to be prepared, because like I said, the grand super cycle is. The countdown is tick tock, it's coming. Tesla was weak again, and again, anytime I see this kind of unexpected weakness, now we still could be in a 1-2 here and finish this 5. That would be ideal. We need this 5, because if we don't have a 5, you only have 3 up. What if again Tesla's the unthinkable? What if this is just a 3-wave move? 3, 3, and 3, and we come all the way back down to retest these lows. It's not impossible, guys. You got to keep an open mind. So you have to manage your risk. But there's nothing that shows that will happen. But I just bring it up that if the bulls lose control and we fall back within the long-term downtrend line, then I do think there'll be panic and the trade could unravel. So I really do think it's important to find support in this area here, 228, 231. So now it could still be a 3-wave correction here, back down to 228.5. So it can still do this. So just again, keep that in mind. Okay. And like I said, there's a lot of stocks that we chart that need more downside. Like let's go to let's see here, Dell. Dell is not in the buy area yet. Okay, we don't have it there, right? We know Snowflake not in the buy area yet, right? There's a lot, so like a lot of the weakness is not too surprising, but it's something we need to keep an eye on. Let's look at the GameStop and GME. So GameStop is in a buy area, but if we do break 24.22, there's a good chance that we're going to retest this low at 22. And if we break this low at 22, then we had a connector wave off this peak right here, off of this low as an here, off of this low here as an A, B, C, and this would be a connector wave, and then that would bring you down to new targets down to 2056. All the way back down to 1817. So, you definitely have to stop out at some point, or you may lose a lot of money, or maybe you just are okay with that, because I'm pretty confident that we'll find support at this too, but nothing's guaranteed, and I can be wrong. And if I'm wrong, then of course it's going to go all the way back down. So you got to understand like the bear case. So I'm showing you it, but using my system, it should bounce here. Okay, but I can't guarantee a bounce. But it should. And then AMC, I mentioned watch the flat. The target is 479. Again, it should bounce, but if it doesn't, well, then you just have a big connector and we'll go all the way back down to the $2.40 area. It's just the way things go. Can't predict the future, but you'll have to make a decision based on what you want to do. So the other thing that's something you want to pay attention to is the Hang Seng index is breaking down, and again we have more downside pressure to the market. Okay, the dollar index is retracing the move from these lows. This could put pressure in the market. What if it comes all the way back up here, right? And I was thinking, what if it even breaks this high? What does that do to our structure? Well, it just creates a real messy connector wave, but you have to keep an open mind. But it's clear that this downtrend that we expected is over. So now we're in an uptrend that will some point end. But if it's going up, it's probably pressure in the market. And the interest rates also are in an uptrend, but at some point that should end, and that should bring upside to the market. But the bear case is if the interest rates go down because of market panic and people panic in the bonds, which we see once in a while in the market. So the rates, I don't really correlate market moves too much to rates, but I just bring it up. But we should be seeing lower rates, and actually so much lower, maybe we will see a panic into bonds as the markets really fall apart for a little bit here. Okay, so I don't think I said, I'm just throwing ideas out there. So that's the market, guys, overall. So again, it's just you gotta watch it. You gotta know where you are, the larger time frames. At some point, all good things are going to come to an end. There is going to be a massive correction against the October 22 lows and the grand super cycle, which is the since the existence of the indices for the crash of our lifetime. Probably be like the financial crisis or worse type of crash. The only indice that looks really bad to me is the triple Qs. I look at the triple Qs and I only have one more swing, and that's forcing an extra 1-2. If I get rid of this, then I would have to say that they've peaked. Holy shit. And it is in the buy area for the wave 5 top of for NASDAQ. So I'm just showing you, but I don't think it's the case. But if those mega cap stocks have topped and they have so much room to go down, maybe it is top. So I'm just throwing that idea out there as you trade technology. The Dow Jones looks like it seems the better indice to trade, but it could be very violent as this flat wants to play out in the short term. If this flat plays out, and I believe next week will be the decision, does the flat play out or not? Okay. But anyway, a lot going on in the market. I wish everyone the best, and during this correction, there'll be a lot of trading opportunities, even as we grind lower. And of course, we'll look for short trades, because if AMD breaks 141, we'll be looking to short AMD on RIPS going forward. And I'm sure there's a triple bear or double bear ETF for guys that want to do that. So we'll just, we're going to have to go back to short in the market as these kind of pivots break down. And I mentioned even NVIDIA was maybe a short opportunity, even though it's kind of close to its buy area. I still wouldn't short it just yet. I would allow that to bounce in the buy area, and then if that were to fail, then I would start shorting NVIDIA too. So those are the things we just adjust fire based on what the market gives us, and not what they wish it to be. And that's how the markets trade it. And again, if technology peaked, this year we've made good gains on the bull cycle of technology getting in down here at December, and we've made all these gains. and getting out, stopped out about here. Not too bad. That's a lot of good gains to go, especially if we're going to lose all those gains this year, which is possible or more. All right, guys, that's all I've got. I'll talk to you later.